Hi guys, after a long time, this is the video I'm doing it on the footprint for the Nifty options. So when you're seeing the normal candlesticks chart, you never come to know that whether the buying will continue here or here or here. Okay, in the trading view panel, when you're switching over to the footprint, we can easily identify that with a confidence. Yes, buyers are there in the options. Okay, so I will show you that how to set the footprint settings and what is the importance of that to trade the options. Okay, just have a look. I don't think no one will explain these type of settings with the practice, because this is more than nearly 50 plus hours of practice, which will give me the confidence. Yes, we can buy the options, okay, whenever that, but try to use it on the always in ITMs. That will give you the best results of the current week expiry. Okay, so now once you get the chart on the trading view, when you have the premium subscription, just switch over to the candles here, to the footprint, volume footprint. Okay, so once you change the volume footprint, it will be looks like this. Okay, so what you need to do is double click on this volume footprint and change the colors, and those things are not required. Okay, here from auto to change to manual, and ticks per row 60. You can increase 80, 120 or something based on the volume price scenario, until and unless you see the clean footprint. Okay, so basically I use 60 because of the volatility is very less. Okay, and second thing what you need to change is here, change this display to profile. Okay, if you're putting it as a profile, you will easily come to know that where the buying activity and selling activity is happening. Okay, and change this type to delta. Instead of buy and sell, try to change to delta. Okay, then come down and show summary info. Here instead of info box, change to the table, and then you have to select these settings. Okay, volume change percentage is there, right? So I would like to change to buy volume, uh buy volume percent, and sell volume percent, delta, minimum delta, and max delta. I will explain what are the things which is explaining for you. And imbalances, put it as a 150%, and stacker levels, I suggest you to go with 3. Okay, if you see in my other settings, okay, which is tested, okay, see 152, and this one also good. Okay, no problem. So now what you need to do is 150% of the imbalance, and stack levels is 2, and I'm not looking further, which is less than 50,000 contracts are trading on the options. I don't want to show the imbalances. Okay, I don't want to show that, so I'm putting another filter here, 50,000. That's it. Everything will be plain for you. Okay, so how you can understand very easily, I'll show you here. Just have a look on my screen. Okay, see, when the price is coming down, okay, the buying imbalances will comes in the green color, and selling imbalances will be there in the red color. Whenever there is two price levels which has the more than 150%, the people are hitting buy. Okay, these levels will let you know that the people are buyers are aggressive, and here sellers are aggressive. And profile, if you see that each level this much buying activity happened in this particular price level, 721 contracts, here 395 contracts of buy. This is point of control, 223 contracts. The same way the selling intensity will become as a profile. You are able to see that, right? Laddering price action here. Okay, sellers. Even this is a green candle. I'm not looking for the buy. Very simple. The green candle opened here and closed here. If you see that 135 contracts sold here, 91 bought it, 257 sold, 501 sold. So overall total buyers minus sellers contract volume, but the particular price level is 501, 503, and in this week 561. So if you are buying here, you will be lose your money. Even you put the stop loss, it will hit. Okay, no indicators, nothing, only footprint which will help you to earn the money. Okay, just think yourself how to do that. Okay, delta trading is awesome, and you will earn the money like a hell. Okay, and the thing is, if you see this particular candle, if you observe here, see the sellers are aggressive. That's the reason selling imbalances were formed. And but this candle, if you observe, totally 88,000 contracts were bought, and totally 303 contracts were bought, and 414 contracts bought. So keep on, people are buying in this particular pin bar, so that you can have a look and buy it, or wait for the next candle. Okay, see the magic here. The people thought that as options are very famous for sellers, 488k contracts they sold, and when they come to know that it is not going down further. When it going up 1.82 contract they sold for averaging purpose maybe, and then what happened at last? 157 contract close. So sellers domination decreased and buyers entered. So if you combine both candles, what it is telling, yes, you can buy it. And if you see here, for the particular candle 56% buy volume is there, 43% sell volume is there. Okay, where you can see that, observe these words. Okay, see here in this side the table info will tell you buy volume percent, sell volume percent. Delta means total buy contracts minus total sell contracts. Minimum delta means in the particular candle what is the mean delta means where the total type of selling happened. See here in the low 488k happened, right? That is the value it is showing here. And in this particular kind of where is the max delta means where is the max buyers are exist here 157, that is what here showing as a 157. If you see here 965 is the mean max delta. Max delta means see 965k buyers are aggressive in this particular price level. And if you see here mean delta minus 834k, that is here. So here buyers, here sellers, again sellers. So very simple attraction here is, I will explain you the detailed video next, okay, to tell that why I put these settings, okay. But for a basic purpose, this table info clearly tell that how much buy volume percent is there, how much sell volume is there, total buy contracts minus total sell contracts equals to delta. In the particular contract where the mean delta means sellers are exist in the particular candle, mean seller is 1363. See this candle all are sellers only, there is no buyers, so that's the reason max delta equal to 0. So this is the way you need to read the delta, and each price level of the candle, one candle is enough for you to earn the money. Okay, see from here if you buy here 36 rupees and your stop loss is just 29 rupees or 29.85 or whatever it may be, some 7 bucks, and from 30 how much it went within 2 candles, 55 rupees. That is what the specialty of the delta. And see here from there 75. So most probably the type of trading you are using with the practice on expiry days, you will get a very nice returns. Okay, so I'm not encouraging the people to trade here, I'm not a SEBI analyst, but still I can tell you that where it will go down or where it will go up. See from this candle you are seeing that, right? Okay, this candle can either buy or not. See here buy volume is 60%. So okay, the green candle is reliable. And the next thing is sell volume is 39%. Okay, so sellers are less. So with the candle low as a SL and candle high as a buy, whatever it may be the place you can buy it. But how many points? 52, 43, 7 points only was stop loss. And if you see previous candles here, see at the low of the candle the people 420k contract sold, 408k candle sold and totally sold. So the candle closed above. So what the sellers will do, they have to unwind their short positions, right? So they are starting buying it here. This is called as a short covering. And see the imbalance has formed here. So the imbalance means the buy to sell, okay, whatever the people are bidding and hitting the sell, hitting the buy aggressively, here more than 150% is there and two price levels. That's the reason this buying imbalance has formed here. So that's clearly indicating me to buy 49.9. If you see here 66 to 71. Okay, so 50 to 71, 20 rupees. It's not a joke. You just, what is your investment? 3000 bucks you are investing and you are getting more than 1500. That's nearly 50% of the returns on your amount. Just try with one lot and check the returns. Definitely you will earn the money like anything. Okay, so now we'll go for the put of today's movement and you observe it how it works. Okay, the same thing, nothing changed. Okay, when call is going down, obviously put will go up. What you're seeing here in this particular candle of the 25,700 put today, or any of the green candles starting, we can just blindly trade the trades. Okay, don't blindly trade the trades. Okay, there are a lot of setups are there. I cannot explain in a single video. Like buyers are going in same way, means buying imbalances here and buying imbalances here in the same direction. The candle closed in the positive, so you can go for a buy. There are different types of setups for there, but only one and only setup which confluences which help you is delta trading. Okay, if you miss the delta trading, you can't win. Okay, I mean with the confidence, with a small SL, higher returns. So come back to the situation. So whether this wave, whatever it is going, whether you buy it, the retracement wave, yes, I can. Okay, combine together. Okay, things. So what is the buying volume percentage here? Okay, see 48%. Okay, and 51%. So we don't know that whether buyers or sellers and they, but previous candle you just see it here, 50% buy, 50% sell. So okay, 50-50 chances. But previously we are able to see from somewhere the buying imbalance is there. But if you analyze the candle here, what you're able to see, 70,000 contracts sold here, sellers are dominate, minus 24, sellers aggressiveness reduced, 106, buyers are dominating. Okay, and if you see the candles, okay, from here if you buy it, okay, 152 rupees, and your stop loss is somewhere around 146. Okay, 146 to 152, how many? 7 points. So 156 to 161, how many points you got? It 7 points. If you're scared a lot, exit. I don't suggest you. See this green candle, can you buy it? No, because 16,000 candles, 16,000 contracts sold, 37 contracts were sold in this price level and 4 contracts. So it's not convincing me to buy, right? So wherever you see this green, is a green candle, I agree. But all are sellers. Sellers are keep on hitting the sell, 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 sell. When compared to the buy to sell, overall contracts minus 37k contracts sold. So again, 45% buy, like a RSA, you people will read, right? Above 60% I can buy, above 50% I can buy. The same way, buy volume is very less. You are not able to see anything here. So there is no need of buy it. Okay, come back to this one. Can I buy it in this dozy? You people will blindly guess it, right? Okay, I can buy, I can buy, I can buy. Okay, no need to think. Just see that 61%. How much? 61% buy volume, 38% of the sell volume. Clearly convincing me to buy. What will happen? Stop loss hitting is very common, but stop loss will be minimum, right? It should not be the more. And what you're able to see here, this is a delta tail. Share the PDFs to you guys. Okay, this is a delta tail. Delta tail is very simple. The sellers very less are here minus 6k. The people not so aggressive to sell. Okay, then 142k contracts bought, and then 51k contracts bought, and the major imbalance from previous level it is reversing. So maybe buyers are entering, and this is convincing me. This is delta tail, sellers, buyers convincing me, and come down to here. What is the, see, 142 740 is the max delta, means this is the place, the max delta, which is below the closing price again. And 6,825 is the main delta, means that is the minimum sellers, means I mean we can say that max sellers are max buyers. So max selling in this particular candle in the bottom happened, and max buyers above happened, close is above that. So it's clearly convincing me for buy. And if you buy it for 140.7, and your stop loss is just below that, is 136, 4 points stop loss. And how many that? 140 to 150, 150 to 157, 160. So 20 points with a 5-point stop loss. You people will say that 1 is to 4%, right? Okay, DM me if you're looking for more footprint strategies. Okay, that I cannot explain with only Nifty options. Even you do the gold or silver or whatever it may be, different types of settings will be there. Okay, usually I write the paint scripts to adjust the levels, okay, for the trading view, where you can access all exchanges data, and premium subscription is required to see the footprints. And never feel that whatever you paid within a month itself you will earn. And if you practice right away, I personally suggest that you will earn the money back. I'm sure about it. Okay, lot of delta setup videos, I have taken the paid courses, and I have the lot of material for that. Okay, but no one will tell you that with the back testing and with their experiences. Okay, so whatever you are going, how to adjust the settings for the particular contract and everything. Okay, if you see my another thing, and here where see what is the tick size I have to maintain, ITR what is suggesting the tick value, and what is the range. For 30 rupees I'm looking for from the option. Just for example, this is the index futures of the Nifty. I'm just looking for the 30 rupees price. Okay, for every 30 rupees of the price, how many contracts are trading in between the 30 rupees. Okay, even the candle is closing in the 5 minutes, but still what I'm looking for every 30 rupees price how many contracts are trading, because Nifty is little volatile of 30 points, that side, this side. So if you set the range, how to adjust the manual ticks, even whatever the heavy volume traded, there are different types of settings are there, and imbalances also we have to change. And if you see here, tick value I'm maintaining 130, and if you see here 150% and 3 stacked levels I'm maintaining it. Okay, so each and minimum volume is 5,000 contracts. So whenever imbalance is forming with 5,000, at least minimum 55,000 above is there, then only it will show you the imbalances. So see, today we could not see any imbalances. So there is Nifty futures, there is no need to trade on the futures, because again this will cost you more, right? Instead of the doing in ITM volumes, okay, sorry, ITM contracts, so that you can reduce the STT also. See, are you able to see here? Here only the past, see, morning 10 o'clock only we got the imbalances in the future. Why? Because it's a, see, out of these 4 imbalances totally stacked here is nearly above 5k volume. That is the reason it is showing these green lines. And here, see, in this particular red candle, if you see here, the selling continuously, the people are hitting sell, 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 sell. That is the reason it is showing the sell imbalances if above 5,000 and hitting when compared to sellers, buyers, okay, the percentage will be calculated. So in this particular price level, 1.56 contract sold, 3.7, 8.7, 97 minus 2, sellers are clearly aggressive. So at last it closed above the sellers price, whatever they sold. It's clearly indicating that sellers were trapped in this candle. That is the reason from 950, if you are buying a particular calls, those are going further. So always footprint trading is a very safe hands, less work, less stop loss and higher returns, and you can increase your confidence. Just don't say that red candle I'm selling and green candle buying or something like that. You have to analyze the each price level, where the sellers are there, where the buyers are. This is called as order flow trading, and this is the delta footprint trading. Almost the things I explained. If you're looking for in detailed explanation of everything, I can't do in these videos, so you just try to do yourself. Okay, thank you.